The Morgan Report with David Morgan.
David Morgan with you with the weekly perspective for the week ending 25 January 2019. Well, first, as I've been doing for a while, I'm going to start with the stock market. And what I will say is that basis the DJI, the industrials, the stock market's actually holding fairly firm, which means that it's held above the 50-day moving average and getting ready to challenge the 200-day moving average. So right now, the rebound of January continues. It looked a little shakier early in the week, but as it stands right now, as I'm doing the perspective, it seems as if we may see further strength in the stock market, not further weakness. My big picture has not changed. I still think that we're most likely to see weaker stock prices overall this year than we are to see higher stock prices overall. Nonetheless, that is an update for right now. Moving on to the everything bubble. This is from Bloomberg, first article. Doom loop of debt threatens to drag down the Australian dollar. The Aussie dollar has not been the strongest out there, but nonetheless, it looks weaker. The beleaguered Australian dollar faces another threat in addition to slowing global growth and the U.S.-China trade war, an addiction to real estate that has created a debt mountain. This has been talked about. I've done some updates with a friend of mine, Prep Aussie in Australia, sent him several articles, and he's well aware of it. It's just a lot of people are not really aware of how big the Australian debt bubble has gotten in the real estate market. Won't read you the entire article, but another indicator that things are not well in the debt markets. Coming back to the stock market, this is from Peak Prosperity, Chris Martinson and Adam Taggart. I don't look at these as two gentlemen as competitors. I look at them as colleagues. I've certainly sent a lot of people Chris's direction for the short course of the crash courses. He's done marvelous work, and I always enjoy when I get to spend a little time with him, which I did in New Orleans a year ago. Anyway, this is from Lance Roberts, The Case for a 50% Market Correction. Highly recommend you listen to this interview. I'm not going to read it to you. I just pointed it out. I try to do a summary of what I think is the most important financial news in the markets every week and try to keep it under 10 minutes. So if there's a tip, if you have time this weekend, I would certainly put this on the to-do list. Straight from CNBC, Commerce Secretary Wilbur Ross. The U.S. is still miles and miles from a trade deal with China. This is concerning. China is the second biggest economy on the planet. And when they have a lot of our debt, they've offed a lot of it. They still hold a great deal. They make most of the stuff that's traveling around the planet. And this could be a precursor to a more significant global slowdown than most people really think about. Most Americans, particularly, think geocentrically. They think U.S. only. Remember, the United States is 5% of the world's population. 1 out of every 5 people on the planet is Chinese. So the old adage is GM goes, so goes America, or whatever. I want you to consider that as China really starts to contract economically, this will have repercussions that will be felt well beyond their borders. Something I'm watching closely. I'll be reporting on it more as we march forward in time in the Morgan Report. Moving on to the gold market. I am just back from the VRIC, the Vancouver Resource Investment Conference. I was up there for the entire event, Sunday and Monday, and 39 years after the peak of gold, January 21st, 1980, I'm still enamored with the precious metals. Gold today closed at $1303.60 according to Kitco, up $22 for the day. Silver was closed at $15.81, up 42 cents for the day. So gold was up about 1.7%, silver up about 2.7%. And if you see any of the videos that I did up in Vancouver just a few days ago, I made a huge statement about we need to see gold close above 1,300. It's had about 3 or 4 attempts. It's been turned down every time except for today. Whether it holds or not remains to be determined. I'll apply my Morgan rule and see if it hits that rule. If it does, then we expect to see some consolidation, some back and forth, and then a real target as far as I'm concerned for this year, and you'll see these on the videos if you care to, of my interviews with Kitco and INN and some of the other people that are at these conferences. I think 1350 is the real level that we need to see in a sustained basis to be back into basically bull market territory. Moving on to what's on the screen over here, the gold telegraph. The Bank of China has increased its gold reserves from 1,842.6 tons to 1,852 tons in December 2018. This increase represents the first major purchase of gold by the Bank of China since 2016, and there appears to be a purpose for the renewed interest in gold. While the U.S. Federal Reserve Bank has attempted to keep gold prices low in an effort to preserve world dominance of the U.S. dollar, other countries have taken advantage by accumulating more precious metals at bargain prices. And, of course, you can read the rest of the article. I think the summary there is sufficient. I want to take a little more time here. This isn't going to show up in the video really well, but it's going to show up. So I want to point out what many really are probably not aware of, basis what I said a few minutes ago about U.S.-centric. The gold price here is a 5-year price chart. I'm just going to go on the left side. This is a 5-year chart for all these different countries. If you see here on the left, we see that gold basically has gone nowhere for 5 years in U.S. dollar terms. But if we look in the Australian dollar, it's up significantly, in fact, making new highs. If we look at gold in Canadian dollars, it's up from about the $1,400 level to $1,720. It's up in the last 5 years. If we look at it basis the euro from 5 years ago, it was about 950 in euro terms. It is now at about 1,130 in euro terms, up over the last 5 years. If we look at it in Japanese yen, it's been higher, but from the 5-year time frame of 135,000 yen up to about 142,000, it is up over the 5-year time frame. Going all the way to the Swiss, up rather significantly, 1150 on the Swiss franc, starting 5 years ago, now at about 1,300. And last but not least, British pound, about 800, and it's now at about 986. So what I'm pointing out is it depends how you measure the gold price and what currency are you measuring it. I mean, if you're Canadian and you're a gold holder, you're not really frustrated as you would be if you're a U.S. citizen holding gold. And I'm not going to go into all the what's, ifs, and wherefores about the currency manipulations that go along with gold. But suffice it to say, you have to get a broader perspective. Gold doesn't look that bad as an investment in a lot of other areas of the world. And I want to finish up this week with a little bit of perspective on the blockchain. This is from ING. Blockchain to shake up mining and metals sector. That's the headline. Let me pause here. I'm not going to say I necessarily agree with this, but I certainly want it out in the public domain for thought and discussion. The uptake of the blockchain in trade finance continues, with ING joining a consortium to digitize the mining and metal sector. The group is developing a blockchain-based platform with mining technology company MineHub that will make the entire supply chain more secure, transparent, and efficient. The solution is being built on IBM's cloud-based blockchain platform, Complex Path. To say that metals and mining trade is complex is an understatement. The paths of minerals such as gold, copper, and zinc through the supply chain to the commodity trading market is typically complicated. Months can elapse and thousands of paper documents can accumulate until a metal reaches the end user. Manual documentation increases the risk of fraud, data entry errors, and delays, which slows down trade finance and increases cost. MineHub will use blockchain to reduce processes and approvals from weeks to a few hours and cut down the paper documentation needed for transport, finance, invoicing, and payment. By digitizing the supply chain, we can increase the level of automation, reduce reliance on intermediaries, and increase the speed at which goods are transferred from miners to trading partners to banks to smelters. This is a significant advance for an industry looking to integrate and use data in ways not previously possible. Smart contracts. A key selling point of blockchain is the ability to run, quote-unquote, smart contracts on it. They automatically control the transfer of digital assets between parties when pre-established conditions are met. In this way, the parties are connected on a chain. Parties that are connected on a chain can securely exchange trade documents like bills and letters of credit. MineHub has joined forces with a gold production company, Goldcorp, to test this new blockchain platform in an export of gold concentrates from Mexico to Belgium. We are delighted to be working with some of the most forward-thinking and innovative companies in the mine and metals industry, said Sorarsi. So I'm going to conclude it there. David Smith is down with the Rick Rule Consortium in San Diego as I speak. This is sort of a launch or a soft launch for something that Rick is involved with Sprott on precious metals on the blockchain. We'll be reporting that in the Morgan Report in more detail, but certainly it's public domain information. You can certainly find out about it. I'm sure there'll be some information coming from Sprott directly, probably in the next couple of days or so. So I will conclude with wishing you all the best, and remember, there is nothing more powerful than the truth.
Hello, I'm David Morgan, publisher of the Morgan Report, and as some of you may already know, the Morgan Report is about money, metals, and mining. In fact, we cover all resources from rare earth elements to precious metals. I've been publishing on the internet for about 20 years. My primary passion is to help people build and preserve their wealth. I love to make people millionaires. I've helped thousands of people via our research in the Morgan Report, which has thousands of paid members and 10 times that amount on our free weekly updates. Here's what you'll receive from our free newsletter. To-the-point webinars, weekly analysis of the financial markets, interviews and our conference schedule, special reports such as riches and resources, and various metals price forecasts. Our paid service client base is primarily small to medium-sized business owners, professionals in the industry, or the seasoned investor who understands markets and the value of precious metals. My area of expertise includes equity analysis throughout the resource sector, energy metals, base metals. We cover startups to billion-dollar corporations. We focus on a special sector that makes money regardless of price oscillations, and the importance of precious metals due to the ongoing currency devaluations. Our team of 3 analysts and support staff can help you build and protect your wealth. It's important for you to know what other people have said. We're passionate about what we do. High integrity and trust. Tell the truth and own it. If we're wrong, we admit it. Take a long-term outlook with major assets and bet a little to win a lot with speculative situations. If you choose to become a client, you will gain financial insights very few, even professionals, recognize. You'll understand the importance of honesty in our financial system. You'll understand how the money system influences almost everything in your life. You'll be prepared for the ongoing currency crisis. And finally, I've chosen to make my life's mission greater than the individual, which means my mission statement is to teach and empower people to understand the benefits of an honest monetary and financial system. It's been a great journey so far, and the best gains in this sector lie ahead over the next 3 to 5 years. I'm fortunate to have earned the status of being a leading authority in my field in helping others protect their wealth. You can email me at support@themorganreport.com or call my office at 480-325-0230.